Hello everyone, welcome back to another video. In today's video, we are going to cover bank reconciliations. Today's video is going to be slightly longer because in today's video, we are going to cover entire end-to-end process of bank reconciliation, and also I'm going to share a practical example. So what are the topics we are going to cover in today's video? First of all, we will start with what is bank reconciliation. Then we will look what are the reasons which cause the difference between bank statement and our journal ledger, followed by we will look the various steps we perform in order to reconcile our bank, and lastly we are going to look at a practical example where we are going to see various receipts and payment, and we will book the journal entry for all of them, followed by we will prepare the journal ledger and compare it with our bank statement, and I will show you step by step guide how we actually perform the bank reconciliation in corporate world. So in today's video, we are not only going to look at the theory part, but also see with the practical example how we actually apply these steps in the real world scenario. So without any further ado, let's get started. So first thing first, what is bank reconciliation? Bank reconciliation is a process by which company compares its internal record, that is journal ledger, with their external record, which is bank statement. Or in other words, we can say bank reconciliation is the process of comparing the balances in a company's account records, which is journal ledger, to the corresponding information on a bank statement. The objective of bank reconciliation is to identify any discrepancies between two sets of record and reconcile them to ensure accurate financial reporting. No matter how good your process is, there are going to be difference between your bank statement and journal ledger for sure. So what could be the various reasons which cause these differences? Let us look at them one by one. So the first reason could be one transaction is appearing in one set of record but not in the other one. For example, bank charges. Let's suppose bank has charged any fees for their services, so they will record in their bank statement immediately, but there are chances that you might have not booked any journal entry for those expenses, which can cause the difference between your journal ledger and the bank statement balance. Apart from that, what could be the other reasons? For example, you have issued one check and you have recorded that check in your journal ledger, but the check is not presented for payment in the bank, due to which you have reduced your bank balance, but in bank statement your balance is still appearing higher. So that could be the another reason of difference between your bank statement and your journal ledger. And like this, you can imagine so many scenarios, like you have posted any incorrect journal entry, or you have posted with incorrect sign, you have posted any journal with incorrect amount. So these are various scenarios in which your bank statement balance won't match with your journal ledger. So these are few of the reasons which can cause difference between your bank statement and your journal ledger, which is your internal record. So remember, in school days, we have learned we compare the bank statement with our cash book. So in corporate world, we don't say it cash book, we say it internal records or journal ledger of company. So you are comparing your journal ledger with your bank statement in order to reconcile them, which is your bank reconciliation process. Okay, great. Now let's move on and look at the steps involved in bank reconciliation process. So the very first step of bank reconciliation is gathering document. You need to collect various relevant documents such as bank statement, cash receipts, cash payment voucher, etc. So this will be your first step of bank reconciliation process. Before starting your reconciliation, you need to gather all the relevant documentation. Once you are done with step 1, you can move to step 2, which is compare the bank statement. In this step, what you are going to do, you are going to compare the bank statement receipt from bank with company's internal record, such as the cash book or journal ledger, and verify the opening balance and closing balance. And in order to reconcile your bank, you need to match all the transactions which have taken place during the month. Once you are done with step 2, you are going to move on to step 3, which is identify the differences. When you are going to compare your bank statement with your internal records, you will identify various discrepancies between your bank statement and company's internal record. Few of the examples are outstanding check, deposit in transit, bank fees, interest earned, or any error or omission which you would have done in your internal record or in the bank statement. Next step in our reconciliation process is going to be reconcile the deposit. So you need to tick off all the deposits that appear on both journal ledger and bank statement. You need to identify if there is any deposit in transit that is those deposits which you have recorded in your books of account but not yet credited in your bank statement. And when you identify any such deposit, you need to adjust your journal ledger by passing journal entries, which we are going to look in the later stage of video when we will see the practical example. Once you are done reconciling deposits, our next step would be to reconcile the check. So what you are going to do is you need to identify any outstanding check, that is those checks which is recorded in the company's book but not yet cleared at bank. The reason could be the check is not yet presented for payment, or the check is presented but there is some issue due to which the payment is not cleared. So whatever your finding would be in this step, you need to adjust your journal ledger based on your findings. Next step in our bank reconciliation process would be to account any kind of fees or interest which is charged by or credited by the bank. You need to check if bank has charged any fees which you have not recorded in your books of account till now, or you have received any interest income but that is not recorded in your books yet. So if you find any such transaction, you need to record them in your books of account. Let's suppose you are done with all the previous steps, still there is any difference appearing in your bank reconciliation, then you need to again compare your bank statement with your cash book or journal ledger and identify what are the reasons because of which your reconciliation is still showing differences. You need to thoroughly investigate and identify, is there any error or omission in the books of account or even in the bank statement, and whatever your findings would be, you need to book the journal entries, correct and adjust it so that your reconciliation will match. And the last step of our reconciliation would be to prepare reconciliation report and all the necessary documents. So you need to include all the details of discrepancies found, explanations, adjustment made, and the final reconciled balance. Retain all the supporting documents which you have obtained during this process, and you need to include your bank statement in the reconciled records and the reconciliation report as part of company's financial record. In top MNC companies, company use software like Blackline, which helps them in performing reconciliation effectively and efficiently. Okay, great. So I hope it is clear to you what is bank reconciliation, what are the reasons, and how we are going to perform the bank reconciliation. Now it is time that we are going to look at the practical example and understand the reconciliation process in actual corporate world, how we actually do it.